Good early afternoon, everyone. Andy here, coming to you from the Indicator Store. I am so excited to be bringing to you another Did You Know series video today. And today we're actually going to be starting a three-part series. Today's feature is going to be about recognizing and taking full advantage of a bear market. And there's going to be three parts to this training that I hope you'll find really, really valuable and get you ready for eventually what's coming down the road here, which I believe is going to be a significant and substantial bear market. And then at the end, we'll just take a very short period of time to update you on how the AC Raptor is doing. I introduced you all to that about 2 weeks ago, and it was doing incredible then. And between now and then, it's continued to just perform at such a high level. So I just want to give you guys an update on that. Please take a look at the risk disclosures and disclaimer. Make sure you're really familiar with all the details described therein. So here's what we're going to be doing today. Today's feature, recognizing and taking full advantage of a bear market. Session number 1 today. We're going to start by going to the charts, and we're going to look over the 9+ year bull market. We have been in this amazing bull market for 9+ years. So we're going to take a look at that just to help us get an understanding and to kind of set the stage to be prepared to be able to recognize when maybe this 9-year run comes to an end. Okay. And I'm actually going to leave you guys with some tangible thoughts and ideas. And the cool thing is they're not hard. They're simple, but they're something that every trader should know and be aware of. Some simple things that you can look for to know and have confidence that you know that the bear market has ended. And it's time to the bull market has ended, and it's time to start looking to implement bear market trading strategies. Okay. And then we'll just take a couple of minutes to highlight and go over how the AC Raptor has been performing. So let's dive in and head right to the charts. So what we're looking at here is the mini Dow, the YM. Okay. So the Dow is a pretty good benchmark. You could look at the S&P as well, but the Dow is a good benchmark for looking at the market as a whole. And these are daily bars, okay? So we're gonna, I'm just basically gonna scroll back over 9 years worth of data, and then we're gonna talk about some key important things. Before I start doing that, though, let's notice, this is the end of January 2018. So this whole year, these are thousands of points. This is over 3,000 points of back and forth. But basically, we've been sideways for the entire year. And there were other points in time during the bull market, maybe not quite that extensive. Sorry, I paused the recording real quick because my trading mascot pug was barking a little bit. So there are other points in time we'll see as we're going back where there was a pause in the bull market run. Nothing quite as long as what we're in the midst of right now. So we'll come and we'll talk more about what likely or possibly could happen from here. Okay, I have some ideas for you. But let's look back. Remember, every single one of these little bars is a day. As I'm scrolling back, so let me tell you what's on the chart here. We have the magenta EMA. It's just an exponential moving average, and it's a 50. Okay, so that's a 50 exponential moving average. The black one is a 100 exponential moving average. And then the cyan one is a 200 exponential moving average. So you can feel free to set a chart up that looks, like this if you'd like. And I think you're going to find that with a few things that I'm going to teach you here, you can really tell a lot more than you might have realized just with some simple tools like this. So as I'm going back, recognize what percentage of trading days stay above the 50 exponential moving average on a daily chart. A very high percentage. Look at all these days. Okay. Also recognize what percentage of price action stays above the 200. So let me just go back to the beginning here. We didn't have any price action below the 200 until over here. So we just barely poked below, but did not close below the 200 EMA on any of those attempts. So we spent a brief few days of price action below the 200 there, and then rallied pretty aggressively, and that just happened. Okay, so look at all this price action. So a little bit of sideways here for a few months in 2016 before that next huge rally ensued. Just barely broke below the 200 there, but not much. A decent amount of price action below the 200 EMA here. This was at the end of 2015 and the first part of 2016. And the same thing over here. But from an overall percentage standpoint, still incredibly limited amount of price action. Trading days themselves below the 50. The vast majority of what we're looking at for days over the last 9+ years were above the 50 EMA, and even significantly less or more above the 200. Very few trading days in 9 years plus were below the 200 EMA. Okay. So just, a few little dips below. And you can see this is this the third or possibly the fourth moving backwards over the 9 years where during every bull market, you're going to have retracements. You're going to have pullbacks. You're going to have periods of where the market takes a breather. And that's what we've seen here. So one of the things I'm going to teach you today in this session is how do we know whether it's just one of these that happened maybe 5 or 6 times during the 9 or 7 or 8 times during the 9-year bull run. How do we know if it's just one of those or that the bull market is actually over? Okay, so you ready for the answer or one way that you can kind of identify that is let's look at all these times where price action broke the 200 EMA. Okay, what I want you to notice is we do not see meaningful lower lows. Okay, so we set a low here, and this was one meaningful lower low. I think this might be the only time, possibly one other time in the 9 years where there was a meaningful lower low. So there was a breach of the 200 pivot set, and then a meaningful lower low set. One meaningful lower low. That doesn't happen very often. So what would have been super meaningful would be if this low right there was breached. That would have been a very substantial and real happening, but it did not occur. See? So the pivot low, no lower low. Pivot low, no lower low. So it breached, but it didn't even close below that low. It got right back up above it. Okay. So one of the things you want to be watching for is when we do get a breach of the 200 EMA, once a pivot forms, and don't make that a challenging thing. It doesn't, you can see it with your eyes. You don't have to have a lot of rules for it. Once a pivot forms, it'll be a very meaningful event if that pivot is taken out and a lower, significant and real lower low pivot is formed. Did not happen here. Breached, no lower low pivot there. Breached, no lower low pivot there. Breached, no lower low. Breached, but no lower low. Significantly breached. I mean, that's a huge, a really big run down, but no lower low. And even though it came down here again, this time did not take out that time, and this low pivot was not taken out, so no lower lows. Okay, so everybody got that rule in their mind, and this is the most recent current price action. Is we put in our first, we didn't even breach there, so we breached over here and no lower low. Okay, we never broke below that. So that's going to be a very telling thing that we're going to want to be looking for, is when we breach the 200 EMA, which we did here very recently, do we set a meaningful lower low below that? That's step number one. And in this case, since the 200 EMA has risen quite a bit here, we could technically get a new lower low pivot down here, still not taking out this over here. So that would be the first step, to take this pivot out and set another meaningful lower low. But then in our actual current price action that we're dealing with, right now, we would need to see this pivot taken out with another lower low. So that second breach, that second lower low formed after the primary pivot that is formed from breaching the 200 EMA. So you breach the 200 EMA, you form a pivot, solid pivot, and then step number one is to take that out and form a strong lower low. And then if you breach that again and form another solid lower low, the odds and probability that we've entered a bear market is very real. What I just described that we're looking for has not happened in 9.5 years, right? The closest it came was back here, where we formed a pivot and then we did just barely take it out and formed another pivot. And to fit the rules that I just described, this pivot would have had to have been taken out. And we would have been at that point considering, the possibilities of entering a bear market reality. Okay. So that's just a real basic thing with simple tools, 3 moving averages that you can kind of hang your hat on. Now, in our next series together, the session number 2 of this 3-part series, I want to show you how to build an indicator. I'm going to tease you a little bit and show it to you. Show you how to build an indicator using the incredibly powerful software Markers Plus. But the reality is, the concept, you don't even need Markers Plus. It's such a basic and simple concept. But you'll see how cool, Markers Plus makes it, and then Markers Plus gives you the ability to fully automate it if you want to. But even if you're not a Markers Plus owner, the concept you'll be able to use with no problem. Okay, so let me just tease you with this. It'll just a preview of what I will be showing you how to do next time, okay, in the next session. So I'm going to turn on this indicator that I built using Markers Plus. You can see these signals, which can be fully automated. Remember, these are daily bars, okay? These are daily bars. I'm going to erase all the drawing that I did on the chart just so that we can focus on these signals. And when we're in a bull market, we're only interested in the buy signals. Okay, I want you to just take a look at this really simple, basic signal that I'm going to teach you guys. If you wanted to trade daily bars, what percentage of these signals are wins? Not all of them, but a whole heck of a lot of them. And the wins have the ability to be significantly bigger than the losses. With a system like this, if you were automating it, I would say it's probably a good idea to only take signals where they engage above the 200 EMA. I wouldn't want to take signals of price action below. So this signal, this bar actually closes above the 200, and so does this one. So those are good signals. Okay, so I'm going to teach you guys exactly how to create this system. And if we continue with our bull market, which I'm going to talk about in a little bit, that's certainly a possibility. So all of those signals I just highlighted, I think would all be wins. This is our first couple that would have, that going long there probably would not have worked out. Going long there would not have worked out. But all these others, pretty doggone good stuff. This is what would be considered swing trading / position trading. Okay. All of these signals, some of them are pretty good, but they're below the 200 EMA. So I hope this gets you excited. I'm going to, again, teach you exactly how to build this the next time in the next session, okay? And this concept, I'm going to also share with you how to adjust it and alter it ever so slightly to be able to take advantage of the bear market side, okay? So this is obviously if we get another move up and the bull market continues, what I'm going to show you how to create using Markers Plus, or if some of you know how to code a little bit, this would be super easy to code. How to adjust to be ready, have this tool ready to trade the bear market side. The thing that's so exciting about a bear market is I feel, kind of bad for those individuals with 401ks and all that kind of money, because aggressive bear markets can just demolish those type of funds, and that's sad. I don't like to see that. But as far as trading like we do it, bear markets are pretty doggone cool if you know how to harness them. And with the Did You Know series, I'll continue to try to give you guys as many pointers as I can, because I believe a bear market's coming. It could be coming very soon, or possibly not for a while. I'll show you more specifically what I think on that. I'm kind of putting squares around the ones I think would be losses, and just arrows on the ones that look like they'd be wins. Yeah, so the bear markets are so aggressive in the way they move. And that makes them, when you know how to harness them, makes them easy to trade. So I'm going to stop doing this because I don't want this video to be too long. When we get into a situation like this, I would pause from trading something like this, because, this is choppy, and that's months. That's a lot of months, but I would not probably keep pulling the trigger, although depending on what type of a profit you're looking for. Remember, a lot of these trades are getting thousands of ticks worth of profit. You know what I mean? So pretty crazy. And the thing is, you can trade these with a stop only as big as the current day that that you just went long on. So like, the stop can be pretty small compared to the general average win that's achieved. So pretty neat stuff. So a little bit choppy in through here. This might be trouble, but then we get off onto this move and, just great wins, really, really good. So try not to let this stretch out too long. Let me just talk to you about, obviously, this consolidation that we have right here for almost the whole year. This is the key. Okay, we just talked about our little idea on how you can recognize and really have confidence that a bear market has begun. I gave you, a few rules, the lower lows and all that, below the 200 EMA. But basically, if you want to make it even simpler, which way do we aggressively break out of this box? If we aggressively break out of this box to the upside, form a quality higher high pivot, and then push beyond that, there's a good chance we'll see another move like this, that will be multiple thousands of points. You can see this really powerful move. If we break out to the upside, form a good pivot, get up above that, there's a good chance that we'll see another somewhat parabolic, really aggressive move up. That could absolutely happen. It is also possible that we don't really break meaningfully above this, or we fake out above and then, come back down. If the scenario that we described occurs and we get our lower lows and we break out below here and we deem that a bear market has begun, watch out below, guys, because there is really no meaningful support for thousands of points. Okay, I would anticipate if we engage a bear market the way I just described, we look for it. If that occurs, we have pretty free sailing down into this area down in here, 17,500 to 18,500, somewhere in that area is, and I'm not saying there's no support and resistance anywhere in here, of course there is, but this is the next meaningful area of support. So the bear market could have massive legs, and likely could be very, very aggressive. Getting down into this area, we'd likely see a pause and a breather and so on. So hopefully you found that valuable, guys. I really look forward to session number 2, where I teach you how to build this trading system. And my goal with this series of three videos and then more that I'll do is to get you guys prepared. I want you ready when the next bear markets come. I want to try to get more data, because this is all the data I can get to load into my chart, and it ends right. Look where it is. It's like down at 5,000. So this was like the beginning of the bull market. I desperately want to get more data in my machine so that I can show you the bear market. You got to see the bear market when the market got cut more than in half, just before this time frame right here. This was the end of the bear market and the beginning of the bull market. And it's nice that I had this data, because I was able to basically show the whole bull market, and that was a healthy, good thing. So I'm going to try to get more data loaded in here. But yeah, with these Did You Know series, I want to try to get you guys that are interested, prepared and ready to take advantage of bear markets, because as traders, they can be really valuable and profitable trading, opportunities and experience. Okay. So let's just check out a couple other things real quick. Hey, the Did You Know series, if you're liking this, if you're finding these valuable, we might not continue to do these in this venue, in the YouTube venue. So I want to make sure those of you that are enjoying this don't miss out on any of these videos. So if you're liking it, shoot me an email to andy@theindicatorstore.com, and I'll add you to a private email list, and make sure that you never miss a Did You Know training series video. They're always going to remain free, but we may not keep posting them on YouTube. We may switch the venue. So if you're liking what you're seeing, make sure you shoot me an email to get on the list, so you continue to receive these valuable videos from the Did You Know series. Here's the Raptor, guys. I introduced the Raptor briefly to the YouTube audience a couple of weeks ago. And I'm not going to go through all this. You can read it over. This is a similar slide to what was up last time. I showed you a fully automated systems template that was absolutely killing it, doing super great. And I'm so excited to announce that that was about 2 weeks ago, a little bit more than 2 weeks ago, that I first introduced it in the one of the first Did You Know series videos. And it's kicked butt since then. So it's still doing great. So I just want to give you a very brief update on that. And you can read over some of these characteristics. Markers Plus, the force from the indicator store, I believe is the most powerful software in the industry today. It gives a guy like me that knows nothing about programming and has no desire to know anything about programming the ability to take a powerful idea I have in my head, use it to create an indicator very simply, and then Markers Plus can fully automate that indicator and turn it into a system like the Raptor. Pretty amazing. So let me show you a performance report for November, and then I'll circle back in case there's anybody watching that did not see the October performance report. So this is only 4 days, trading days in November, November 1st, November 2nd, and then Monday and Tuesday. It's Wednesday the 7th right now, and I'm shooting this video in the midday, and I do not have today's data, but it is a winning day so far for the Raptor. So there'd be some more gains if I had today's info in here also. We're looking at about $2,000 in gains for these just few days, 2.71 profit factor. That is a beautiful thing. Any profit factor over 1.4, I would consider to be tradable. And when you get into 1.5, 1.6, you're talking about a really robust and solid system. So you can see, we're just really, really good. I mean, this is such a small sample space. I'll show you the October data. I think we're at 1.92 profit factor for October. You can see 1.88 win to loss ratio, which is, also super, super powerful. So just a really, really nice, powerful performance report. And here is, I exported to Excel the October spreadsheet. And this is the same that was shown before in the first YouTube video. Well, actually, when I first introduced it, I don't think we were all the way through October yet. Oh, you know what? If you're interested, you can search the Indicator Store YouTube channel for a week in the life of the Raptor. We actually rolled a whole week of trades at 500 times on replay and let you see the Raptor trade for a whole week. And I think that was mid-October that happened. So that was pretty cool. So you're looking at 14,500 in gains for October. 1.92 profit factor, really, really solid. You'll see it's really strong on both the longs and the shorts. Stronger on the short side because we were in a market that was going down hard, but both sides are really good. And about the same win to loss, ratio 1.87, about the same as what's happening so far in November. So the bottom line is from the day that I first released this and showed everybody about 3 weeks ago or more, it's continued to kick butt in the live market since then. And that's a pretty exciting and cool thing. Okay. So here's the details on the Raptor. If you like what you're seeing, you have questions, please email me any and all questions. Don't be shy. The Raptor sells for $5.99. If you're a Markers Plus owner, you need to have Markers Plus to run the Raptor. It's the engine that drives the Raptor. And if you wanted to dive in before November 14th, you could save $150 off that price. If you're not a Markers Plus owner, I'm happy to make you a really, really great package bundle deal on the Raptor as well as Markers Plus. Like I mentioned, Markers Plus, if you've watched any videos on the YouTube channel here, you've witnessed from Pablo how incredibly powerful Markers Plus is, and I'd be happy to, talk more about that with you if you want to know. Markers Plus, you want it. You need it if you're a trader. Every trader should have Markers Plus, in my opinion. So there you go, guys. Hopefully that wasn't more than 20 minutes. Tried to be as succinct as I can. Be watching for session number 2 of this 3-part series. I'm either going to crank that out on Friday, so a couple of days from now, or maybe early next week at the latest. All right. I hope you'll email, guys. Let me go back to that just super quick. Shoot me an email here so that you can be on the list. And if we do change our venue, which we're leaning toward doing away from the YouTube channel, you'll never miss Did You Know Training Series video. Have a great rest of your day. Thanks for watching.